And time now for the markets with Leighton. Leighton, you say there's some talk that Mid-South rice acreage may shift next year?
That's right. Corn and beans may pick up those acres in 2013. Also ahead this week, we are following these stories in the markets for you. China is expected to import less cotton. The U.S. is in the catbird seat, according to some analysts, as far as soybeans for the time being, and the current huge tonnage of beef pressures cattle prices. We begin with cotton, where futures closed higher Wednesday despite a stronger dollar and sharply lower crude oil. However, there are warning signs about falling demand for cotton, most notably from China. I talked with Extension Ag economist John Michael Riley on Thursday. Well, John Michael, what's the overview right now as far as the cotton picture?
Well, just the past couple of days, the outlook has been positive, but if you go back to how the market closed September, it didn't look very good. A lot of issues going on. Number one is China, always the big player in the cotton market. They're continuing to see signs of slowdown in their economy, which is never good when they are such a huge buyer. So if you look at exports that China have been, if you look at Chinese imports of cotton, it seems that they're slowing down, not in that regard as well. Also, another thing is the dollar index, you know, how our currency compares to other nations. And for that part of the latter half of September, the dollar was strengthening, which makes our cotton more expensive. And also the Dow Jones Industrial, these barometers of the American economy seem to be a little tepid. Since then, the dollars began to weaken and the Dow Joneses began to strengthen, so that's been good news for the cotton prices over the past couple of days.
Mm-hmm. And longer term, though, as we look into 2013, I mean, when we talk about planting season, what crop mix farmers may have next year, it looks like cotton is probably likely to lose some acres.
It's definitely in the back seat. You know, you look at the competing crops for acres, corn and soybeans, the major two in this state and in the nation, and those prices are still very strong. So there is an inclination that we will continue to see higher corn and bean acres versus cotton. The other, you know, the wild card here is South America, and there's rumbles of the fact that they're going to bump up their corn and soybean acres, which is going to limit their cotton acres, which may be beneficial to cotton as we move to next year, to next spring in the northern hemisphere. So that's kind of the rumblings I'm hearing and I'm seeing, and I think that could very well play into cotton's favor if South America doesn't have those acres, and we have less acres in India and China, or less production in India and China this year. That could play into cotton's favor.
And in the closing weeks of this year, 2012, as far as the price picture, likely to pretty much continue as it has been for cotton.
It has been in a very narrow range for the past couple of weeks, and the likelihood of it coming out of that is probably not there.
Some Mid-South cotton acreage will likely shift to corn and beans in 2013, and the possibility of rice losing acres next year to those crops is even stronger. LSU ag economist Dr. Kurt Guidry says that prices for rice can't make a sustained move higher until export demand improves. In the meantime, he believes rice prices for the 2012-2013 marketing year have limited upside potential. Rice supplies, Guidry says, continue to get bigger, and demand must pick up in order for the price situation to change. A Brazilian crop consulting company is now estimating a soybean crop from Brazil that's 2 million metric tons lower than the most recent USDA estimate. Analyst Virgil Robinson says he sees a lot of positives for the bean market right now as far as American farmers are concerned.
Until about March or April of 2013, the U.S. is the sole supplier of beans for the globe. So I don't envision them collapsing beyond this $2 that they've just recently declined. I think they're approaching pretty solid ground here.
We keep a seasonal flavor going for trivia. We have another pumpkin question for our quiz this week. What state is the largest producer of pumpkins? Is it Illinois, or California, or Iowa, or Arkansas? I'll tell you the correct answer in a few more minutes. In the beef sector, analyst Tom Fitzenmeyer has been looking over the latest data from the cattle pits. He says people are often asking, why are producers in some parts of the country putting weight on cattle with such high-priced corn? Here's Tom's answer.
And there's a couple reasons. One is you look at the deferred contracts in cattle. Each progressive one is higher price, which is a signal to producers, hey, if I hold on to these cattle, they're probably going to be worth more. So there's some incentive there. And I think the replacement cost is so expensive. Figure, well, maybe I'll put a few extra pounds on the one that I've got and then see what happens with the projected higher prices. So that's the reason. The problem is it creates a lot of tonnage, and it really put a lot of pressure on beef prices this week.
And we end the markets with a forestry-related story. Scientists at Oregon State University are genetically modifying trees so they will grow shorter. And the results are confirming that modification of height is achievable. In the bigger picture, some researchers say the point is trees can be genetically engineered to have many different advantageous growth traits. And this could be beneficial as far as future developments in this country and around the world in bioenergy markets and other sectors. And the answer to the trivia quiz takes us towards the feature story. And this week, A is the right choice. The state of Illinois is king when it comes to pumpkin production, according to Brownfield Ag News.